I'm back with another quick financial tip on how you can save, build your credit, and have money for emergency spending if needed.
How y'all feel?
As I always say in my initial disclaimer, I am not a financial advisor by trade. I just always share tips and tricks that has worked for me in the past, and I'm going to share it with you, and maybe it will help you. So what we're going to talk about today, I'm going to make this video quick and brief because I don't like long videos. We're going to talk about certificate of deposits. So what is a certificate of deposit? Your bank offers CDs. So the way that a certificate of deposit can work for you is, one, it's good for savings. Unlike a traditional savings account, a CD, you cannot just put money in there and then go and just pull it out whenever you want it to. It's not connected to your debit card. You're gonna actually have to put your CD in an account for a duration of time. It can be a 6-month, 1 year, 3 year, 5 year CD. So your money will go in there and you can't touch it for that time unless you close out that account. While your money is in there, it is earning interest. Right now, the interest on a CD is anywhere from 1% to 2%, with the average being 1.5%. So I think that a CD is a great way for those who need to save but are not disciplined enough to have a traditional savings account without touching it. So whenever you get, any extra money, open a CD, put that money in the CD, and just leave it in there and let it grow. Yeah, the interest may not be that high, but one, at least you're earning interest on it, and two, it's not easily accessible just to go in and pull $10, $20, $15 out here and there. The next good thing about a CD is you can use a CD to take a loan off of your CD if an emergency situation arises. So in the event that something comes up, maybe you need your car fixed and you need $1,000. Typically, if you have the money in your savings account, you're gonna pull it out your savings account. Now that $1,000 is gone. And again, unless you're disciplined enough to be like, okay, now every paycheck, I'm going to manually add $100 back to my $1,000 is back. Usually that money is just gone. Other than that, if you use a credit card, for example, credit cards have high interest rates. You're looking at anywhere from 16 to 26%. The good thing about a CD is that the interest is going to be extremely low on your CD. The way that banks calculate interest on a CD loan is usually it's about 2 points higher than what your current CD interest rate is. So if you have a CD that is getting 1.5% interest, then your CD loan is going to be 3.5% interest that you have to pay back. But really, you're not paying back 3.5% interest, because another pro of a CD is that even if you take a loan out against the CD, you're still earning interest on your money. So you're still earning 1.5% interest. So really, you're paying back 2% interest. So if you think about it, if you take out $1,000, 2% interest is like $20. The other thing that you have to keep in mind is that your CD term, loan term, cannot exceed the term of your CD. So if your CD is 12 months, your loan can't exceed 12 months. If your CD is 5 years, your loan can't exceed 5 years. So you can play around with how long you want your loan term to be, as well as what the bank will approve you for. So, and then the last good tip about a CD is that for anyone that has less than stellar credit and you're looking for ways to build your credit and you can't get credit cards or take out loans because you're going to get declined because maybe you don't have credit, a CD loan is perfect for that also. The bank is going to approve you more than likely because a CD loan is low risk, because you used your CD as collateral to take that loan out. So the bank is sure will give you a $1,000 loan or a $5,000 loan, because if you don't pay us back, we're just going to take that money out of your CD. But the bank reports your payments to the credit bureau. So every month that you pay back on your loan, your credit score is going to go up and up. Good payment history boosts up your credit score. So that's it. That's easy. So those are my quick 3 tips that you can use for a CD. You can use a CD to help you save if you're not disciplined to save on your own. You can use a CD as an option if you're ever in an emergency situation. You can take a loan off of your CD at low interest, and you can use a CD to help build your credit. As always, thank you guys for watching. I try to make them as quick as possible. Don't forget to like, comment, and subscribe.